So let's go ahead and get started. Most of you already know Marina. She's a lawyer over in the EU, and she's been studying and working with EU regulators in regards to token laws for quite some time. So she's going to present on what she's been working on today, and I'll look forward to hearing from her. If you have any questions, there's a Q&A form, so you can ask any questions there. We'll touch on that after the presentation. And then you can also talk amongst yourselves in the chat below. All right, all you.
That's great. Thank you very much for the introduction, and I'll just start with a presentation. So I'm very happy to have this presentation, and I think it's very timely because it's something that is happening in Europe, and it's at the moment very important for everyone that is working in blockchain or working with crypto assets in general. So I'll have a presentation of this proposed regulation on crypto assets in EU. And then I'll also talk about crypto assets in general to make just an introduction for the people that might not be that familiar with them, with terms, then talking a little bit about the market because it's quite important when we put it in the context of the regulation. And then use cases, and at the end, consideration for the policy framework. So I will do an introduction about the policy framework and then maybe some comments around that. In the last few months, I have been working with two other lawyers, Simon Porot and Florian Glatz, which are representing different member states. And we are talking to regulators, educating regulators, but also talking to different stakeholders regarding this proposed regulation. And I think it's very important for, again, for everyone that wants to work in the European market. So I think discussion around that is very important and, again, very timely. So let me tell you a little bit about crypto assets in general. Crypto assets are a very diverse range of assets, but what they have in common is that they are all registered on a blockchain, and which allows different conditions, permanence, direct appropriation, uniqueness, etc. So if not in legal terms, but in everyday usage, we use different terms for different types of tokens, crypto assets. We we talk about utility tokens, security tokens, NFTs, stable coins, protocol or governance tokens. And it might be problematic when we go and talk about specific legal terms that are also used in different jurisdictions. So maybe one jurisdiction can use one term that might not be similar to another one. So I'll tell you later about the taxonomy that Mika, the Markets in Crypto Assets Regulation, has proposed, but that's just an introduction. So what you can see here are different types of tokens. We divide it in native crypto assets and tokenized assets. The ones that are quite interesting are the fungible ones, because those are also the ones that are regulated with Mika. The non-fungible ones are just excluded from Mika. So those are tokens that are used to represent different identities or crypto art, collectibles, etc. So the fungible ones are, as we call them, protocol tokens, the ones that are used to govern layer 1 blockchain protocols, application tokens. Then we talk about utility tokens that can be used in debt tokens, governance, and payment tokens. And the other ones on the other spectrum, the tokenized assets, are the stablecoins, which are also partially regulated in the Mika proposed regulation. So let me tell you a little bit, or present a little bit, about the crypto assets market. We have seen a tremendous growth in the last few months, but also in the last year. We have more than 7,500 crypto assets and more than 300 exchanges. You can see the market cap. I just took the information from the website today, and it's just growing. We'll see how long this is going to continue. But what I want to present here is actually that if we take a look at the global financial assets, again, Bitcoin or the cryptocurrencies combined are still small. So the market is still small compared to other financial assets, especially derivatives markets or global real estate, for example. Of course, we have seen a growth in those assets, especially in DeFi and especially in this Ethereum ecosystem. DeFi has had a tremendous growth from the summer on. And to this date, we have 31 billion US dollars locked in the DeFi market. So why is this important? Why are the market conditions important? And why did actually the Mika and the European Commission decide, why have they decided to regulate crypto assets? So when we talk about crypto assets, it's very important to distinguish two different kinds of crypto assets, the centralized ones and the decentralized ones. The centralized ones are the most significant actors. They're operating through a dedicated legal entity, which keeps control on token protocols. And I'm just, sorry, I will mute this. So they're operating through a dedicated legal entity which keeps control on tokens or protocols, and they have different activities. Issuers of crypto assets, custodians, multilateral trading facilities, brokers, portfolio managers, etc. Then we have the decentralized ones that are the most innovative players on the market at the moment. They're deploying smart contracts on the blockchain that are ultimately operated by the final clients who are in control of the protocols and tokens. So again, those activities are very different. They could be decentralized finance, which are using or doing loans, exchanges, etc. Video games, arts, coordination mechanisms, insurance, and many more. So two examples of centralized and decentralized use cases. For example, the centralized one is Bitstamp. And I'm using this example because this is one of the rare exchanges that we have in Europe. Most of the exchanges are based in US or Asia. So I think this would be one of the exchanges that would be mostly defined by, their activities would be defined by the Mika regulation. So this is the exchange platform that is trading crypto assets. It's operated and controlled by a company, this one, for example, in Luxembourg, and the IT is a centralized database of trades connected to blockchain for deposits or withdrawals. Then we have the decentralized one. Uniswap is the most famous example. It's the exchange with radically innovative liquidity pools. So they don't have order books, and it's operated by smart contracts deployed by a company, but not under its control. So the IT is deployed on the blockchain. Transactions are sent directly by the user to the smart contracts. Talking about crypto assets and the use cases, we have different use cases for crypto assets. I have put them in 3 different categories. We have the established ones that are the protocols, the most famous ones like Bitcoin and Ethereum. Then we have different market-related services as Bitstamp, for example, the exchange, security hardware and software, and other services. Then the emergent ones that are the most, again, interesting ones, the decentralized finance, Uniswap, and other lending, for example, activities. the creation, distribution, sale of NFTs, unique digital assets, then collective organizations on blockchain, decentralized autonomous organizations, and those organizations, they also use tokens to govern this organization. Stablecoin insurance and other projects. And then we have primitives that are used by different organizations or products like digital identity, RegTech, central digital bank currencies, privacy preserving protocols, and decentralized data storage, for example. So those, what I wanted to show is there's a lot of use cases to crypto assets. And then later I will tell you how Mika is approaching and how Mika is regulating this different types of use. So the idea for Mika and the objective is actually to have legal certainty and legal clarity in the European market. Currently, the problem is that the European market is very fragmented. For example, again, I would like to tell you the example of Bitstamp. Bitstamp didn't know where they could be regulated in the European Union, so they went to Luxembourg, and luckily they got all the permission to actually execute their services there. But the US was much clearer about, for example, all the licenses needed for decentralized exchanges. Any other company or service provider has quite a lot of problems when they want to cover the whole European market, because they would need to understand the regulation of every different member state. So I was telling you about this Mika regulation, which is a proposed regulation. But it is a regulation and it's not a directive. So this is very important for the EU law because we have these two types of rules, and the regulation actually is the rule that is the same one for the all member states. The regulation is binding and it applies across the whole EU. So this is why the regulator wanted to have a regulation, a proposed law that would be the same all over Europe, because they understand that blockchain and crypto assets can be traded internationally and globally. And there might be some problems. I will tell you more about that, but some of the other parts, for example, securities or financial instruments, as we call them in Europe, they are regulated by a directive, is the MiFID directive. And there could be some potential problems when you think about the regulation that Mika is actually, like the framework that Mika is representing. Then we have the objective of support of innovation. Innovation is very important, and I think that all the governments of all states in the world understand that. But for example, blockchain has been something that is also presented at the EU level. The EU has a plan on how to promote blockchain, and this is also a part of it. The consumer and investor protection, this is something that all regulators are concerned about, and of course, financial stability. The financial stability has been addressed also because of some big players have proposed or have are working on projects that might be very global and might also represent a competitive projects or currency towards euro or other fiat currencies. So then we come to the definition part of the proposed regulation. The most important is, of course, the definition of the crypto asset. That means digital representation of value of rights, which may be transferred or stored electronically using distributed ledger technology or similar technology. So As you can see here, the definition is very broad, and this might be a good thing or a bad thing. Of course, the regulation is meant to stay for a really long time. So this is why the regulator said, okay, let's write something about crypto assets, and let's have a definition that would cover all the use cases that we see today, but also the future ones. But at the same time, the first objective of the regulation is to have legal clarity. And if the definitions are too broad, it's really hard to understand what are the what is the thing that every single, for example, crypto assets issuer needs to follow, and what are the rules exactly that they need to follow. So then we have few other types of crypto assets defined: the asset reference tokens, which are tokens that are they want to maintain a stable value by referring to a value of several fiat currencies that are a legal tender, one or several commodities, or one or several crypto assets, or combination of all of those assets. And then electronic money token, or e-money token, means a crypto asset, and the main purpose of which is to be used as a means of exchange, and that purports to maintain a stable value for referring to the value of a fiat currency that is a legal tender. So both crypto electronic money tokens or asset reference tokens could be so-called stable coins. But it really depends if they are defined as an e-money token or asset reference tokens, because they have then different definitions, and also their issuers have different responsibilities under Mika. And the utility token is the token that I think it's mostly known, the term is known to everyone, and are going to be the tokens that are not crypto assets, asset reference tokens, or e-money tokens. The scope of Mika, the securities are not covered by Mika, so they are outside of the scope. And here again, there is this MiFID directive that is covering the financial instruments that are not covered by Mika. So there might be a problem when different member states have different definitions of financial instruments. That means that they have different definitions of what a security is. And if we're saying Mika is not covering securities, there might be different problems in the future when talking to the regulators in member states. So the other part that the Mika is covering is the crypto asset service providers. It is very important. The definition of crypto assets is very important, because when we see the definition of crypto asset service provider, we can see that the definition says that this is any person whose occupation or business is in the provision of one or more crypto assets services to third parties on a professional basis. So the definition of crypto assets is linked to the definition of crypto asset service provider. And here also in the regulation, we have some examples on who or what are the services. For example, the custody and administration of crypto assets on behalf of third parties, the operation of a trading platform for crypto assets, and there are a few others. So the crypto asset service providers are the ones that are regulated under Mika and the issuers of the crypto assets. So here we can see the Mika and the pilot regime taxonomy proposition, and what type of crypto assets is regulated under Mika. So the fungible tokens are regulated under Mika. Those are also the TAP tokens, the crypto collateral tokens and governance tokens that we were talking about, the asset-backed tokens, so the fiat-backed tokens, commodity-backed tokens, and physical goods and services. The existing regime that we have is regulating the central bank digital currencies, so they are not covered by Mika. And there is another pilot regime that is actually regulating the securities and the markets under EU financial regulation. So what we have under Mika, again, are those different types of fungible tokens. Non-fungible tokens are excluded. So this is the two types that I was talking about. Are having different regimes. So the Mika regime is the mandatory bespoke regime. The scope is actually to regulate crypto assets, utility tokens, cryptocurrencies, and stablecoins, and the activities, issuance, exchange, custody, investment services, and authorized actors are all actors, except from e-money tokens that are restricted to credit institutions. The pilot regime is focusing on a transitional regime towards definitive rules, granting exemptions to financial regulation under certain conditions. So the security tokens or the transferable securities on the blockchain. So the pilot regime is not a regulation. And at the moment, the European Commission, the European Parliament, and different member states are focusing on the Mika regulation. And the pilot regime will be a more, I would say at least for now, a more flexible framework for regulation of the DLT market. So when I'm talking about Mika and the pilot regime and the current scope, I think it's very good to take a look at the examples. Before I was describing the centralized and decentralized exchanges and what is the difference between them. But when we take a look at those examples in the light of the Mika regime, we can say that the centralized exchanges are covered by the regulation. They can comply with no major issues because they are centralized and also they are, I would say, also bigger players. What is very important here is that the Article 68 is banning exchanges from listing assets that have been issued with no white paper. So the obligation of the issuer of the crypto assets is to issue a white paper at the same time, and those crypto assets are regulated. So of course, exchanges will need to list only regulated crypto assets in the future. When we talk about decentralized use cases and decentralized exchanges like Uniswap, for example, it's not very clear what Mika says about decentralized use cases, because at the beginning of the regulation, it says that all the issuers and other service providers, they need to be incorporated in one of the EU member states. And as we know, decentralized use cases and decentralized exchanges, they are not incorporated anywhere or any other DAO that might not be linked to a legal entity. So there we have some questions, some discussions with different groups. Are those decentralized use cases excluded or not? It doesn't seem like that. So again, what is the scope of this part of the regulation? And of course, they cannot respect obligations because they imply control over assets listed, the operation, etc., because they don't have this control. So they are, again, not governed from a centralized entity, legal entity. And then the questions, if those decentralized use cases are illegal in EU or not. So the question still remains. What is the feedback in general regarding the Mika and the pilot regime? I think that it's very good that we have a regulation that is defining crypto assets and the service providers and the issuers. It's very good because we have, again, a very fragmented market, and it's better for the companies that are from the European Union, but also for other companies that would like to approach this market. So this is a very positive thing, but at the same time, there are some questions about proportionality and about equal opportunities between the newcomers and the ones that are on in the market already for some time. It's much easier to follow the rules for the bigger companies, for the centralized ones, than for the newcomers or decentralized companies or for smaller startups. Then the DeFi, the decentralized finance, we have seen an example is the Uniswap. It can be a problematic part because as the regulation states till today, all these organizations would need to be incorporated in the EU, and it's not really clear how and what would happen to all the decentralized use cases. Then the proportionality that I was already mentioning, and adopted operation requirements. So there are some problems within the operations, especially when we, for example, there's an article talking about exchanges and they how they need to connect or update certain transactions with the custodians. That might be problematic from the operational point of view, and it's something that is not usually today used in the business cases of exchanges. So that's also something that it's worth discussing, and it's worth presenting to the regulator, just for them, I think, to understand how complicated could be being compliant with such regulation. So that's the last slide. Just to conclude, I would like to say that this regulation has been, the proposed regulation has been published on the 24th of September. So we had different discussion with different stakeholders, some representing the industry, some representing different NGOs or politicians. And I think that everybody is working really hard to make this regulation something that could be used and could foster innovation in Europe. But at the same time, we can see that it's very, very hard to regulate, especially the decentralized use cases. It's something that the regulator is not used to do. We always think from this centralized perspective. And I think we need to have a lot of imagination and creativity in order to do that in a way that we would not stop innovation, and we would not stop the parts that are the most interesting at this time, especially within the Ethereum ecosystem, the DeFi examples. But at the same time, of course, still having some legal certainty, and especially preserving the financial system that the EU has. So if you have any questions, I would be happy to answer, but I would also like to have a discussion around this, maybe decentralized use cases, and what would be, for example, best practices, self-regulation, or other standards that we might use in order to maybe protect consumers and in different stakeholders that are entering the market. but at the same time not kill the opportunities that we might have today, but also in the future.